Happy Saturday, everyone. Sorry I didn't cover this when it actually happened, but it was my birthday, and so that took priority over making another YouTube video on MPW. Now, of course, the day after I dropped my last MPW video, reflecting on 2023 and giving an idea of what my outlook was for 2024, the stock plummeted about 30%, literally right after that video. So there was a news release that came out that caused a big dip in after hours trading and then a day of insanely high trading volume. I'm going to break down the press release and just give you all an idea of what's actually going on here. Thank you for tuning in to the Fiscal Philosophy YouTube channel. I'm a value investor. I own MPW. Just because I own it doesn't necessarily mean it's right for you. Let's jump right in. So to start off with, they open with MPT or MPW today announced plans to accelerate efforts to recover uncollected rents and outstanding loan obligations from Steward healthcare system, to be referred to hereafter as Steward, which is their largest tenant, by the way, just to add some commentary to that, and related processes designed to reduce its exposure to Steward. So Steward is not doing so hot, as we'll find out later in the article, and like pretty much here towards the beginning, they want to say, we want to lower the percentage of our business that is done with Steward. Tenant concentration risk is one of the, I would say, negatives about MPW. And so we definitely want them to lower their concentration in tenants, individual tenants like Steward, especially that are doing poorly. As disclosed in the company's third quarter 2023 Form 10Q, Steward delayed paying a portion of its September and October rent to MPT. So a portion, meaning they still paid something, but not everything. Despite obtaining additional working capital, financing, and selling its non-core lab businesses, so they're selling off some divisions. Steward recently informed MPT that its liquidity has been negatively impacted by significant changes to vendors' payment terms. So to me, that sounds like vendors are basically probably requiring more cash up front, maybe because they know Steward is not in the best place and don't trust them to pay later. That may be. As a result, Steward has continued to make partial monthly rent payments. Again, we kind of knew that. And total unpaid rent under its consolidated master lease is approximately $50 million, exclusive of a previous $50 million that was already kind of on the books. So basically, Steward's kind of getting raked over the coals by their vendors, and it's kind of causing them to dig their IOU hole a little bit deeper with their landlord, MPW. So this is pretty much just saying who they engaged as far as financial advice and legal counsel in order to probably draw up this agreement, but do it in a way that's financially sound both for Steward and for MPW. And this is where I think they start to kind of get people concerned a little bit, because they outlined that part of this plan that they've come up with is to fund a new $60 million bridge loan with Steward. And I think a lot of people feel at this point that this is generally just basically throwing good money after bad with Steward Healthcare. Now, unfortunately, we don't know the particulars of Steward's financials to the extent that MPW management does. So this sort of relies on, kind of taking MPW's management's word for it that this has a real shot at working out for both Steward and for MPW and its shareholders. And I think, there's been a lot of questions in the past year that have been raised by people in that regard. And this paragraph here, I think, is where people really started to get kind of alarmed, and I think probably rushed to hit that panic sell button. They're basically describing how, since there can be no assurances, Steward will execute plans, repay loans, and that they also don't have any assurance that Steward will be able to make the remaining lease payments. They have 22 years left on the term there. they're basically, since the outlook is not great and they've fallen behind on rent again, etc., generally accepted accounting principles, that's GAAP accounting, allows them to do a write-off, which they're going to do a write-off of $225 million, which, I think in the grand scheme of things, it's like not great, right? But I think the reaction in the market has been disproportionate to what that really represents. But people have been hearing, bad things about Steward. Steward is their largest tenant. And once again, they're kind of bailing them out. They're taking this big write-off. To me, it seems like the purpose of this was really like a heads up that they're taking this giant write-off in their fourth quarter 2023 earnings report. And, they did mention in there that this doesn't necessarily mean that there won't be other write-offs or anything like that. They also added a table showing that non-Steward portions of their portfolio produce the vast majority of their revenue, although it also coincidentally highlights exactly how much of their revenue is from Steward, which honestly looks like a big chunk. So I suspect that may have made people nervous rather than reassuring them. But I personally want to hear exactly what they have to say on the next earnings call, which I plan to listen to in its entirety, and sort of go from there, see what steps they're taking. I'm not really in any rush on this. The reason I'm not freaking out is because big picture wise, we're talking about $200 million on shareholders' equity of $8.28 billion. So this should leave them with a bit more than $8 billion in equity remaining. And book value is just this split up on a per share basis. Right now, during these somewhat trying and challenging times, I believe management's job is just to preserve this equity as much as they possibly can and try to build up and conserve cash so that they have more options when debt starts coming due in a couple of years. Another thing, though, about this write-off is that it may reduce their taxable income. And with regards to REITs, they maintain REIT status by paying out the majority of their taxable income to shareholders. So if what would otherwise be taxable income is greatly reduced by a write-off, it may be something that they will utilize in order to justify another dividend cut, which I know a lot of people wouldn't want to see because a lot of people bought this for the dividend. But at the moment, I view it more as an asset play more than an income play. And while another dividend cut would probably make dividend investors go absolutely nuclear, I will say, remember what I said before. I think the management's job right now is to focus on conserving the balance sheet and shareholders' value and equity through that while times are tough. And then when times are good, get back to paying out cash. So the other thing I wanted to make sure I discussed before the end of the video is the unusual trading volume on Friday. We had 151 million shares traded on Friday. The average, 17.4 million, almost 10 times as many traded on Friday. The short interest in MPW also happens to be about 25%, or at least that's what it was when I checked for my previous video. So I suspect one or two, or a combination of two things maybe. Either a great amount of shorting occurred on Friday on this news, or there was a massive retail panic sell-off, or perhaps some combination of the two may have taken place. Suffice it to say, this is a highly unusual amount of trading volume, and I think certainly an irrational move in the share price. So I'm exercising patience personally at this time. I did, in fact, actually pick up another 100 shares at these new lows, simply because I do think there is a pretty good chance, for my own purposes, that this is a chance to be greedy when others are fearful and lower my basis. And that decision on my part is mostly based on the continued strength of the balance sheet and the anticipated lowering of interest rates throughout this year. I'm content to see how that affects things before I do anything too drastic. If you, in fact, made it to the end of the video, I want you to know I really appreciate you. Make sure you subscribe so that you can keep watching my videos when they're released. Hit the notification bell so the app will notify you. Make sure you follow me on X/Twitter at Mr. Macho Mog. Give the video a like to help me in the algorithm. Join me on Discord, link in the description. Also, catch me 8 p.m. Saturday nights on Cashflow Kings Live, my other channel. Link is in the description there as well. And consider being a member. Why not?